Hey, what's up guys? John here. We've heard about environmental social governance, ESG, but we haven't heard about it in the context of how it's going to impact all of our lives. And the world leaders in Davos, Switzerland right now, I'm talking all the multi-billionaire CEOs, the political leaders, all of the decision makers are in a room in Davos, Switzerland right now deciding our fate. That fate's already been decided in a very, very large scale. This ESG movement, now what this is going to do is it's going to set banks and large lenders and all businesses and organizations under a certain set of rules and standards in which they're going to be able to either get access to money or not get access to money, to have a really good score or a really bad score. If you have a bad score, you could be in really big trouble, right? So the world is changing in such a massive way. And so for all of us, if you're running a business or you're working for a business, our lives they're going to be changing in a very, very big way. And it's going to change in such a dramatic fashion to where people might not be able to get home loans. People might not be able to refinance their properties or get insurance for their properties. All these things are happening. Here's the breakdown. Sustainability is our roadmap to security, stability, and progress. There's 3 bullet points I'm going to cover here, and then I'm just going to break down into the facts. Accelerate renewable energy use, right? They say the Russia-Ukraine problem is going to expedite this. So accelerate renewable energy use, participate in collaborative networks. For example, more than 30% of worldwide food produced is lost or wasted because of inaccurate demand calculations or transport issues. Ukraine has large lithium oxide deposits, with batteries being the most expensive part of electric vehicles. Rising prices of nickel and lithium can slow market adoption, right? So they say we need data-rich, connected business networks. So that is going to be a very, very big part of this. Also, leverage sustainable finance. And they say increased environmental, social, and governance, ESG, reporting standards force companies to accurately collect, organize, and report their impacts to multiple standards. So these businesses are going to have to go through a rigorous reporting standard. And that is going to impact their business as a whole. Investors want greater disclosure as to see not only regulation, but trends in consumer and employee demand. They want more sustainable products, services, policies, and business performance. They want to work for responsible companies, and they want more engaged. This helps create economic opportunities and stabilize employment, right? So right now, we are seeing this statement from the CEO of Bank of America and how they are transitioning their lending business. Their entire model is going to be going through a massive change. They already have invested significant funds in this, but where we're headed as a society is it's unlike anything we've ever seen in history. Bank of America CEO Brian Moynihan, ESG transition is a big business opportunity. Bank of America chief executive says that the ESG transition is a big business opportunity for the bank and that it is investing in expertise as demand grows for financing across industries. Speaking to Financial News on the sidelines of the World Economic Forum in Davos, he said that he sees substantial revenue opportunities from helping clients transition to a cleaner economy growing significantly. It's a business opportunity. We are helping our clients transition. Our job is to help them make it. So it's a business opportunity, Moynihan said. He added that the bank was educating its employees on ESG issues to help clients with the transition. The bank has committed $1.5 trillion by 2030, so the next 8.5 years, as part of its sustainable finance goals outlined in April last year, and deployed around $250 billion, $250 billion last year, or $250 billion last year. Bank of America has invested in ESG deal makers in recent years, as banks including Citi, Deutsche, Goldman, JP have all created dedicated teams of bankers to help finance the clean energy transition that is estimated to be worth $7 trillion every year, according to the OECD report cited by the Sustainable Finance Initiative. This is also going to impact stock valuations. This is going to impact people's retirement plans. Everything as a whole is going to be changing dramatically over the next few years. While climate was at the heart of the last in-person Davos conference in 2020, it has also taken far back seat as world leaders, policymakers, and bank executives have discussed recession fears, the Russian-Ukraine conflict, and the threat of deglobalization, right? Okay, so get that idea. As of right now, this is HSBC, and HSBC says that ESG exploded in popularity during the pandemic, with sustainable investment funds managing around $2.8 trillion of assets right, according to Morningstar. But here's how this is all going to play out for all of us. This just came out. Everything that I just showed you came in the last few days, all with Davos. So the climate-related risks are on the rise. Climate-related disaster costs are on an upward trajectory. Indeed, the U.S. has sustained 323 weather and climate disasters since 1980, where overall damage costs reached or exceeded $1 billion, including CPI adjusted to 2022. The total cost of these 323 events exceeded $2.195 trillion. In 2021 alone, there was 20 such weather, climate disasters, events, including 1 drought event, 2 flooding events, 11 severe storm events, 4 tropical cyclone events, 1 wildfire, and 1 winter storm. Overall, these events had significant economic effects on the population in the impacted areas, impacted banks across the U.S., climate risk ripples through the economic sectors and across all regions, impacting banks of all sizes across the U.S. Banks sit squarely on the front line as they make loans for clients in virtually every industry all over the world. As such, this climate-related exposure is potentially enormous. Impacts on banks and financial institutions. As financial intermediaries, banks and financial providers stand in the eye of the storm, climate costs and the accelerating policy changes in response to the crisis will induce a widespread repricing of assets. A widespread repricing of assets. What is this going to mean, right? What is this going to mean for people that own houses, for people that own businesses, infrastructure? Everything's going to get repriced. Direct and indirect exposure to climate risk. Unprepared financial institutions will suffer reduced valuations across a wide range of assets such as carbon, intensive energy and transportation, commercial and residential real estate, exposed to weather events, agricultural, and risk of decreasing yields and increasing weather variability. No region or geographic area is safe from the devastating effects of climate change. In the Southeast, coastal property damage is already costing insurers billions, and the Midwest, agricultural yields will face increasingly steep declines. I've covered this before, what's going on right now in Florida with all the insurance companies either leaving or canceling hundreds of thousands of policies, and also farmers are reporting that they are producing less crops. And the CEO of a major farming company yesterday came out and said that he believes food pricing is going to go up $1,000 per household, increase $1,000 per household per month. Changing demand for products based on carbon footprint will lower collateral coverage, increasing the probability of default. So what they're saying is banks are going to be taking on more risk with lending. And so with that risk, they need to either lend much less money or not lend at all. And ultimately, to lead to credit and valuation write-off, the reduced asset valuation can have a contagion effect on banks as they attempt to decrease their exposure by offering these standard assets at fire sale prices. Previous events such as 2008 subprime mortgage meltdown have catalyzed financial collapse, and those are on a much smaller scale than climate change, right? Indirect exposure to climate risk matters. Banks may not have direct exposure to climate risk, such as oil and gas industries, but their clients may generate income from carbon-intensive industries or be a real estate located in flood-prone areas. Indirect exposure increases the risk of credit risk of banks, unsecured and secured bank-issued bonds, and even issuers in the municipal bond market, right? So we're getting an idea. We hear about this environmental, social governance, right? We've heard about these social problems. We hear about them all in the news, right? We hear about everything that's happening in the environment. You hear about that on the news as well, right? And then governance, stakeholder capitalism. Stakeholder capitalism is essentially changing from where we are right now as a shareholder capitalism, where everyone works and contributes, and we run and build out a society. Everyone does their part. But stakeholder capitalism is where these corporations, they have the kind of the final say as to how things will actually play out, because they are going to be the ones that are going to be lending the money. They're going to be the ones that are going to be setting out these new standards and guidelines in which everyone else is going to have to operate under. So we're going to start to see massive changes across the real estate space. We're going to see large changes for stocks, for valuations, for small businesses, for all businesses. Even if you think, hey, I have an online business, I'm immune, right? But the problem would be, is your customer going to have an impact on the environment? And if so, that could then impact you. Like, all these things change in such a massive way, and it's happening right now. But I'm curious, what do you think about this entire situation? Do you think that we're going to see massive changes in this debt-ridden economy? We look at the auto lending business. We have 1.46 trillion in outstanding auto loans. How many of those auto loans would have completed under future guidance, where these cars are just basically going out there and quote unquote polluting the environment using fossil fuels, right? Doing all these things. Would they have a harder time getting a loan? What about the real estate market? What about credit cards? People going out there spending money on things that are maybe not great for the environment. All these things could fit into new categories that could make very big challenges for a lot of people. Now, I think that these world elite they're moving us in a direction that I think most people just simply can't fathom. They can't understand how quick the world is going to change. But smart entrepreneurs, people like us that are paying attention and studying where the world is actually going, we're going to be able to kind of pivot and move a little bit better, I think, than most people. Please hit that like button. Hit the like button. YouTube is going to share this content to educate more people. Subscribe here if you want to learn real information about the economy, what's really going on to protect yourself and your family financially. Subscribe here. Also subscribe to my second channel. It's going to become a podcast this week, an interactive show. I'm going to have a phone number people can call in. We can talk about stuff like this, talk about real estate, the economy, talk about all this one-on-one, which is going to be really cool. And then LinkedIn, Twitter, Instagram, everything's in the banner. I'll catch you guys later.